Welcome back, everyone, to another episode of the Cash Flow Chronicles podcast. We appreciate you tuning in today. This is your first time checking out the podcast, or you have yet to see my full infinite banking overview. Please head on over to the website, legacylifeandretirement.com. And right there on the front page, very easy to find, you'll be able to view that overview, give that a watch so you have a better understanding of what we'll be discussing here today. I'll also link that video at the end of the show, so it's a little easier for you to find if you're kind of lazy. So today I am joined by Mr. Tony Shavers III. He's a best-selling author of the book, Is Your Dream Really Worth It?, as well as the founder of My Story Matters, a writing program. He has a strong passion for creative writing and wrote his first poetry album called Undeniable Truth at 19 years old. If you don't know what a poetry album is, my friends, go ahead, get your culture up a little bit. It's okay. He's a life coach, which I think is absolutely great for everyone to have, but I'm happy to have him here sharing his story and his infinite banking journey all the way from Laurel, Maryland. Please welcome Tony. What's up, man?
Thank you, Shawn, for having me. I'm really excited to be here. Drop some gems, hopefully, during our time together. But I'll pick up a little bit from where you left off, if you don't mind. I started creative writing in the fourth grade, and literally, it was my gift, if you will. My mom made sure that I had journals, notebooks, pens, paper, whenever I needed to continue to feed into a gift that was brewing within me since the fourth grade. And over time, I took it more seriously, developed my craft a little bit more. I wrote my first book, as you mentioned, Is Your Dream Really Worth It? And then that led me on a journey of speaking engagements at high schools and colleges throughout California. And then eventually a writing program, a one-to-one coaching for self-help children's book and memoir authors. And over the last 5, 6 years now, it has been an incredible journey getting to work with people from all different backgrounds who have expertise or knowledge or an experience or a life story that they want to share in the written form. And I get to be that personal kind of coach to guide them through the process. And then in addition to that, I just started doing the life coaching route. I'm also in school right now, in grad school, to become a therapist. And so I'm looking forward to 3 more years. I'll be done
Cool.
with school, and then I can begin practicing therapy, which I'm really excited about, and continuing in that endeavor.
That's awesome, man. Sounds like you're doing a lot of amazing things with your life and been able to, uh, you know, communicate and grow with a lot of awesome people. Tell me a little bit really quickly, because of course this is an infinite banking podcast, so we're going to get into that stuff. But uh, having an author here and writing, being able to sit down and put your thoughts on paper and put that collection of words together into a book is something that I know is not easy to do. So tell me a little bit more about that book that you wrote, and um, how was that? Where'd you get the idea to
Yeah,
write a book?
yeah. So it's funny, and I'll send you a copy as well. When I wrote the book, it was February 22nd, 2017, at 2:22 in the morning.
Okay.
And I'm a spiritual person, so I woke up and literally had no idea that during this moment I was going to be writing words. But I always kept a notebook next to me on my laptop for when those moments of inspiration struck, right? Because for me, it's a creative zone that I get into, and when the words come, they come out of flood, and
Gotcha.
I have
Yep.
to make sure I capture that. And that's exactly what I did. And I woke up, got out of my room, went to my living, grabbed my notebook, and started writing for about 3 hours straight. I didn't stop.
Wow.
And by the time I was done, I was like, wait a second, this is actually pretty good. This is something of value that I need to kind of tap into. And so I looked over what I had, and it was just some of the things that I had done in my own personal life, and it got me to where I was. That I knew that these life lessons, many life lessons, things that are not uncommon. We've heard them all before. Create your gratitude list, your network is your net worth, things like that. But it was the way in which I was able to kind of writing that literally makes you build if you're having like a personal conversation with me, um, and helping you kind of tap within in yourself to uncover the fears, the hesitations, the doubt that you may have that's preventing you from achieving the next level of where you aspire to be.
That's awesome. So, what do you think made your book have the success it had versus, because there's a lot of books in that space, similar, topics, we'll say that genre. What do you think connected with people or allowed people to connect with you about the information that you were providing in the way that you were writing?
Yeah. I honestly, I really do think it's the personal approach that I took into the book. So the book is not this preachy self-help book. There's the questions, there's the activities, the reflection assignments that you do throughout every chapter. And then my personal story also intertwined with that. You may see a lot of self-help gurus out there who would just do this, do this, do this, and then they don't tell you like what did they do? What was their experience like doing the exact same things? So everything that I did in my book were things that I was actively doing. And so I think that's what separates me a lot. And the feedback that I've gotten so far with the 60 plus reviews on Amazon have all hinted towards that they appreciated that it wasn't this um, manual, if you will, but was more of like a guide. And it recognized that there's going to be moments of pitfalls and doubts throughout the journey, but you have to keep going.
That's awesome. So, I think there's a lot of similarities in what you were going through with, writing a book. I'm sure people were like, "Man, why are you writing a book? Like, don't do that. Nobody's gonna buy it. This isn't gonna work out. Like, gonna be a waste of time, all that stuff." And then the same, tying that in with the little black book I have right in front of me here, Becoming Your Own Banker. And I'm sure you went through your experiences of when you first started looking into this. Uh, and your story may be different because I know that your aunt has been practicing infinite banking for quite some time now. And I think there's very few people out there that have any knowledge of this more than 2 or 3 years ago.
Yeah.
I know it's really coming onto the scene now, but tell me a little bit about your story about coming across this little black book and how infinite banking has kind of started to tie into your life and really just the inception of that idea, that seed being planted in your head.
Yeah. So, I actually didn't read Nelson Nash's book until about a year and a half ago. But the introduction to the whole concept of infinite banking really started with my aunt sitting me down over 8, 9 years ago at 23 years old, or 9 years ago now at 23. And she asked me, where are you saving your money? And I was like, oh, like in my bank account, like Bank of America, I have my
Course.
checking and savings. I'm 23. I was making great money. I was, living it up, right? And she said, okay, well, how much money are you saving? And at that time, it was about $900 a month. Like that was, I didn't pay rent. Like when I tell you I was
Yeah.
living large, right? And she said, okay, well, how long have you been, saving this money up? And I said, oh, for a couple of months. I just started. And she said, okay, well, sit down and show me your bank account. Major freeze moment because I wasn't prepared for that.
Mm.
And she sat down right next to me, pulled on BigAmerican.com, went on to logged in. She went to my savings account and she said, well, the month that you told me you were saving up this money and the amount that you said you were saving not match or reflect what's currently in
Where's it
your
at?
bank.
Where's the
Where
money? Is it
is the
telling you?
money? And I said, "Oh, well, I transfer some money here and there. I want to go out, have fun with my friend." And she asked me, "Where do you want to be by 30?" And at that time, at 23, this is when I kind of started learning about really before we begin into the whole infinite banking concept, just the power of a dollar, the power of money. Like that was a conversation that was typically had within like my immediate family.
Mhm.
But my aunt, who's married to my uncle, like she I knew them to be financial, um, competent,
Yeah.
and they were just financially sound, and they were very financially wise. So um, I knew that I would listen to anybody, it was going to be her. But when she, we talked about the power of a dollar and all those things, and at that moment, it really a light bulb went off because she said, "Where do you want to be by 30?" And I said, "Well, I would love to have a house by then. I would love to do all the extra things." And she said, "Okay, well, if I can show you a way to get the thing that you want, right? Um, and be able to, in a sense, finance it on your own without having to go to banks, without having to ask GoFundMe's, none of that. Utilizing the current money that you're saying you can comfortably save, if you figure out what that number is, would you be open to learning more information?" And I say that because it's a very powerful question. Like, are you open?
Yeah.
Because that, if yes or no,
Yeah. Very
and
clear.
if no, then there's no need to continue the conversation.
Yep.
But I knew that the only thing I had to lose was not knowing what I didn't know. And so even though I knew my aunt was financially sound and savvy and all that, there was a little bit of doubt on my end, of course, it's natural. But I say, you know what? Yes, I'm open for information. Because if anything, I can still make a decision that, you know what? Information,
Not for
this
me.
is not for me.
Yep.
And at least I can take the information. Shawn, I am now going to be 30. How old am I going to be? 32 next month.
Nice. Congrats.
I've been practicing the infinite baking concept since 23.
That's
My
pretty
life,
well.
we'll get into this, has not been the same over the last 9 something years. And literally, that just goes to show the power of being open for knowledge and being receptive to learning and growing over these years.
That's I think that's what it's all about, open mind. I mean, Nelson talks about rethinking your thinking, and it's really hard to rethink your thinking if you're blocking everything off that is a new concept, a new idea. Where do you think you would be right now? And I know it's impossible to say, but if you were just doing what everybody else would have been doing at this point. Like, you're 9 years into your policy. Obviously, things I don't care if it was what we kinda call, like, a small baby policy or whatever back at the beginning. That thing's starting to pick up and function pretty nicely right now. Obviously, all of the money that you're putting in, you're making more than that money. So, where do you think you would be right now if you had never learned about participating whole life, not even infinite banking back then, just participating whole life, this thing that
Yeah.
you told you about.
One, I wouldn't have, a death benefit, right? Just to talk about the life as a whole. I knew that was important to me. Even going into the conversation before we got into infinite banking, I knew for me, at a minimum, if something was to happen to me, because we know life is not guaranteed, life is not promised, tomorrow can be it.
Mhm.
But I wanted to make sure that I could at least protect my family. They wouldn't have to go worry about doing a GoFundMe. They wouldn't have to go ask family and sell barbecue plates.
Yep.
I had a pool of money to use for whatever expenses that were needed to take care of my final wishes. So that was important to me, number one. Number two, it was like, okay, well, if I can get this benefit and I can also utilize the cash that's growing into my policy, this is pretty awesome. I can tell you, had I not done this, I would not literally, I was the transfer king. I would transfer money from the savings to the checking every moment that I got. So I looked at this really as a forced savings tool for me.
Definitely.
So when we sat down, she asked me, what can you comfortably do? Right? Because we know when we'll talk about this and get into the conversation, premiums that, that you have to, you're contractually obligated to pay. And I said, well, about $250 a month, which is $3,000 a year. And she said, okay, great. That's something you can do comfortably. That wouldn't, you know, it's not an extra bill for you. It's baked into your current spending habit. I said, yes. And she said, "Okay, well, how much are you saving?" And remember, we had that $9 a month. And I said, "Well, things may change. I want to kind of be a little bit modest, a little bit, and kind of be realistic.
Mhm.
So I would say maybe another $3,000.
Okay.
So total, it was $6,000 for this
That's a
policy,
gotcha.
and that's what I would can comfortably say I could do. I have been doing that since 23 years old. Um, and to now have the pool of money that I do and have access to had literally allowed me. Now, I have a ton of examples we'll get into, but
Nice.
I paid for my wedding. That just happened a couple months ago.
Yeah, congratulations.
Thank you so much. We paid off debt. We're working on my student loans right now. So
Feel that?
it's the power of this have a forced savings tool that I can't just go to my bank and just go and transfer the money out and get it in a second. It's gonna take a couple of days. So that alone is like, okay, I'm being smart about the money that I'm utilizing and securing for my future. So that's really what it was for me, and how I looked at this whole thing and how I continue to look at it as a forced savings tool for me.
At 23, why do you think why do you think you were able to get it? Because we talk to 23-year-olds, we talk to young people all the time. I don't know what the generation is under us millennials. I forget what it's called. But you talk to these younger people and they're like, one, death benefit. What are you talking about? I'm never gonna die. Like, I don't need no death benefit. You're like, okay, that's wild. Uh, but two, you bring up life insurance really with anybody, and they're just like, whoa, 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 whoa. What do you I'm not life insurance. I thought we were talking about saving money. I thought we were talking about making money. I thought we were talking about having our money make money, and now you wanna talk about dying and life insurance. Like, what are we talking about here? So, how at 23, what type of exposure did you have where you were like, "Oh, life insurance makes sense to me. That's something that I should do." Like, had you had lost people in your life, family, whatever it may be, where you saw either this did help or they didn't have any and you guys were in a tight position? Like, what made a 23-year-old? Because at 23, I did not have life insurance. I'm 32 right now. I'll be 33 in March. Like, I didn't have life insurance at 23 because you think like it's a waste of money. There's nothing that's going to happen to me. Why would I need any coverage right now?
Yeah. Yeah, I'm glad you asked that, Sean. So, my mom actually had a life planning services company. So, a lot of the conversation that she'd had with families, she was a medical social worker. She worked in hospitals. She talked with families literally every single day. And when situations occurred where death would happen, families did not know where information was. Family didn't know how they were going to cover expenses. And when she would come home and talk to me about the things she was experiencing at work, I think that over time you just say, I don't want that for myself.
Mhm.
And so I had to take an adult stance and say, okay, either I can make sure that whenever my time comes, that my family can properly grieve without having to worry about, oh shit, what credit card debt did he have? If he had any, or how we're going to pay for this funeral? What kind of casket did he want? Like, does he want to even have a casket? Right. So a lot of these things, I didn't want my family to have to worry about anything, especially money. And then I honestly got sick and tired of seeing the GoFundMe's as the vehicle used for help bury and cover people's expenses. I mean, I don't think that's what the intended focus was used for. Um, and so it made me just have a different approach to go, how can I make sure that I don't have to worry about that, for myself?
Now, do you feel like, because it sounds like your aunt sat you down, you guys had that conversation, uh, and here we're big on leading with education, and I'm interested in kind of how she taught you a little bit about what this is, what it was without the black book. But before that, do you feel like there was any pressure there? I think a lot of people when they see our stuff on social media or they hear people talking about this wherever it may be, they're like, well, I don't want to talk to this person because I feel like they're going to pressure me into buying something that I don't want. Now, you were dealing with family, somebody that was older than you, somebody that had some influence over you and whatnot, and obviously that you respected. So maybe you felt like you were in a position that you're like, oh, I should probably do what my aunt says because she's older, she's smarter, and she's my aunt. Like, did you feel any of that pressure with her providing you that information and being like, hey, listen, Tony, if this is what you want, what you're telling me, this is what you should do. How did that come across for you?
Yeah. So, like I said, in my immediate family, my mom, brother, like the conversation around money didn't necessarily happen.
Mhm.
But we knew my aunt Robin, she in the larger family, her and her husband, they were the people that you would go to talk about money and talk about just learning and knowledge. And I lived with them for a certain period of time. And I had always been inspired and admired by them growing up. Like I wanted to emulate their whole lifestyle and things that they do and want and their time freedom that they have. It was important to me. And so, but I never felt that I was pressured just because she was doing it. Like her kids, they are great. They're doing it. But if I would have told my at 23, you know what? Hey, I don't think it's for me. She would have let me go and do my own thing, go out into the world as I was already doing. And I would have done that. And there would have been no pressure. It was just a different approach for me because I looked up to her and she was the inspiration to me that I knew that I had I had to listen
Yeah.
because I was gonna be doing myself a disservice, not her. She could probably care less if
Right.
she
Yeah, she'll be
like,
all right.
yeah, she'll be fine. But she was literally trying to help me. And I knew that. So it didn't come off as like a salesy approach. It didn't come off as like I'm trying to get your a higher commission or, all the things that you hear into the world now when it comes to this. Um, because she actually doesn't get as much commission as she would have gotten, you know,
Mhm.
a whole nother conversation. But I just knew that information was too good for me to at least not be having open mind to. And then from there, I got to make the final decision on like, okay, let me let me try this. Worst case scenario, if it doesn't work out for whatever reason, I can surrender my policy and move on. Best case scenario, I stick to this, I commit to this like I do anything else, and I can see the 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 fruit of my labor begin to harvest.
Definitely. And I think I'm sure what you realize is, hey, my aunt and my uncle they have this lifestyle that I would kind of like to have at some point. They're the people in the family that know the stuff about money. If she's telling me this, it's kind of you are the sum of the five people you hang around most. So you're like, all right, well, I have this mentor, this money
Mhm.
mentor in my life. And if somebody that has what I want is telling me that I should do something, I should probably do it. It's the people that don't have what I want that are telling me what to do that I should be like, "Oh, man, what are the intentions here? You're trying to tell me to do something. You're Mr. Trainer down at the gym weighing 350 pounds and you're trying to tell me that I should be doing sit-ups and eating better." It's like, "All right, well, what about you, man? I don't know how do I know these sit-ups are gonna work? You ain't doing them." But so there's so much in this, but I think really being able to capture that from a young age is critical because it's all about time with this thing. Like time is time is something we're trying to constantly get back. It's the one fleeting thing that we can never recapture. But this is the one thing that can give you so much more control over your time as time goes on. So you mentioned that you've utilized your policy in a bunch of different ways. What are some of the things that you've been doing just very recently with it? I know you said you had the wedding. Like, kind of tell me about that experience of using your policy, how easy that is. I think a lot of people get a little confused with the complexities of, becoming your own banker. And you're like, I don't know what goes on at the banks. I go there, they give me the money, I walk away. Like, that's it. I deposit the money there, I take it back out. Easy as that. How has it been being the bank in your own system when you need money to fund the wedding, when you need to pay for school debts, all of these type of things.
Yeah. Yeah. If I can, I want to just kind of take you through the first kind of moment where this became real for me, and then kind of take you to the most recent one.
Perfect. Yeah.
Because like anything, right? You don't really get a chance to see the power of it until you use it.
Hmm.
And so when first got my policy, we, injected I started out premium and I moved to annually soon after. Um, but we had access to my cash value right away.
Yeah.
And at that time, I had some debt, like all young people,
Yep.
and I had a credit card. It was like maybe I think like $1,000 on it. I had enough cash value to be immediately to be able to take that and pay off that credit card. And my aunt, when she walked me through the whole process. She said, "Great, we're gonna go online. We're gonna request a policy loan. In 2 or 3 days, you're gonna get the money in direct deposit to you." And that's exactly what happened. We took that $1,000, we paid off Bank of America, 'cause it's the only bank I'm bank with, and then she said, "Now here's where it becomes here's where the light bulb begins to turn on for you." Because most people will just take their cash, pay off their card, and go on about their life.
Go spend
She
that
said,
money.
"Here's how you're going to, um,
Become the banker.
be the honest banker, right? And become the bank, right? The infinite banking, the process, right?" And so, she said, "Okay, great. What we're gonna do is set up an amortization schedule." I was like, "What in the world does that mean?" She
Yeah.
said, "It's just a payment schedule, right? And we're gonna take, so that way we're not utilizing any new money. You don't have to go find new money to do this with. The current payment that you were currently making on this credit card, right? At that time, I think it was like, I don't know, like $75, something like that." He said, "You're going to take that same $75 that you were already making and planning on paying every month until you paid off that credit card. And you're going to charge yourself interest." She said, what she does for her is a minimum 10%, but she said you
Mhm.
can choose whatever. I decided to choose, and how I still operate now is the interest rate that I was already paying to the credit card company.
Mhm.
And this credit card was like 18%. So
That's
I
what
decided
back
that
then.
I was going to pay the 18%, that
You were gonna
back to
pay.
myself, right?
Yep.
And so what was cool about all of this is that when we set up the schedule to, over, I don't know how many months it was, or about a year or so it was, to get this all paid back, a year and a half. What was cool then by the end of it, there was a pool of money in the interest column that would have gone to the credit card company had I continued doing the same thing. And what was cool that I got to keep that interest in a separate bank account. And then I can decide, you know what? This is going to go towards pumping my paid up edition. It's going to help boost my devs benefit even more. It's going to help pay for my premium for the next year, whatever I wanted it to do. But the cool thing about it was that I got to control the money that I would have just naturally given away. And that's what the banks bank on. They bank on you making the minimum payment. They bank on you not making payments, and they bank on you, continuing to charge more every time you use it, right? And so at that moment, that first time I used it, I said, "Oh, okay, I kinda get it now. Like, this is all the money that I would have been giving away." Over the years, as I became a student, and my cash value started to grow a little bit more, I had access to one point at $1,000. Now I have access to over $40,000. My wedding was in July, and we decided, my husband and I, that we were going to utilize our cash values. When I first started dating him, I told him, "Listen, we're gonna do this.
Get a policy.
You need a policy. It's not gonna work if you don't do this." We now have four between the two, between both, that had well over $100,000 in cash value that we can utilize and that we've been using.
Nice.
What was cool about it is that we our wedding was about $40,000, somewhere $50,000, somewhere around there. And we called up our policy company, told them to send over our money, direct deposit,
Positive that, yep.
submitted a form that was over 10,000, but did that, but in a matter of a couple of days. And that money of $50,000 was right in my bank account. And we were able to take our credit card, pay for the venue, pay for the
All the
food, all
expenses,
that.
yep.
Right. Got all
So
the
it's
points
point
from that,
Mhm.
and then took the money, paid off the credit card, and then with okay, well now we're gonna be making these payments back into our policy. But what was cool about it and is that the whole time we were utilizing the funds, it wasn't that we were utilizing our pool of money in our policy. We were utilizing the company's policy and they were using our policy as collateral, right?
Mhm.
And so my money was protected. It has continued to grow while we were using it, while we were going through the ceremony process, while we were going through the whole week activity that we had. Our money never stopped growing and working for us. And that's what I find most interesting about this whole thing is that if I would have just saved up $50,000 and just gave that money away to the wedding venue, that money is gone forever. And now to be a student of this and to understand the value that infinite banking has and being an honest banker and paying yourself back and the beauty that that is, that I can now go after long-term projects now. Once we're done, we have a couple more months of doing our repaying our system back, but I have a spreadsheet here in my house. I check it off every month. On the 30th, every month, we make a payment and we check that off and we move on to the next month.
And how good does
And
it feel to be paying you back and not be paying
really
bank
good,
back? You're just like
really good.
I felt with my student loans where I'm like, I didn't wanna pay off my student loans for the longest time, and I got into infinite banking and I had the cash, and I'm like, "Okay, I can pay this down now
Yep.
because I'm not losing my money, and when I pay myself back, when I make my payments, I'm paying me back, like, I'm paying myself I'm keeping all of this money within the family, so it makes that so much easier to
Yeah.
pay yourself back because 'cause you're like, "I'm just making my system that much more efficient every time I pay myself back, and the money is right there to use again if I really needed it."
And I could also decide the time frame in which I want to do this in. If I don't want to be back in a year, that's typically what my mindset goes to. But I say, you know what? I want to go maybe 3, 4 years paying this back on. I have the control to do that. Bank of America, Wells Fargo, and any other thing out in the world will allow you to create your own custom payback schedule, like payment schedule. You have to go according to their rules and regulations. But in this space, I can decide as the banker of our policies that if we want to skip a month for whatever reason that we need to, we can, and there's no penalty for not doing.
Yep.
And there's just so much that I learned in a short amount of time that I believe over the next 10 years. My aunt tells me all the time. She's like, if I was 23 doing this she said, by the time you are in your 50s, 60s, like you are going to go back to the 23-year-old self and say, thank you so much for just being open to information because literally life has not been the same since then.
Yeah, and that's all we're trying to educate people with. That was some great information, great shares there because it shows you again, just normal people. We're just normal people adding something that has been around for 200 plus years that and I let the people decide, why don't we know about this? Why aren't they teaching you this in school? Why don't they have commercials on TV about it? Why is your financial advisor not sitting down and talking with you about this? Why? I'm sure there's a lot of reasons. You guys could come up with a bunch of them. I'm not going to sit here and put my tinfoil hat on, but all we're trying to do is get you the education that you should have deserved to have back when you were in high school. Like this should have been a class teaching you about how to be
Yeah.
your own banker in high school. That's when you're really able to grasp the concepts. You're becoming a grown up and you're like, you know what? Instead of right before I go to college, instead of going and opening that bank account and that credit card and racking up all that debt and doing that, I'm going to go and open up my own bank with this policy that protects my family and has all these other benefits. And I'm going to start to capitalize my system. So by the time I graduate from college and I go to get my new job and all of these things, like my system is really starting to become efficient. And then by the time I have my family, like there's just all of these things that you could change so many people's lives with if you allowed them, they allowed themselves to implement this early on, like you did when you were 23. I can't imagine what your stuff is gonna look like at 50. I have to wait until I'm, in my 60s for mine to start looking like that. But
And Sean, if I could also add like 1 or 2 points here, because
yeah,
I talked to some friends of mine about this as well. And, for those that are watching and will be watching later, um, the main question that I got when I talked to my friends about this is, well, how much is it going to cost me? Right. Which to no fault of their own, because we live in a world where we have bills on bills on bills on bills on bills, and we cannot think of adding another bill to our plate.
Yep.
I flipped that to say, what are you currently stuffing away in your savings account every single month? Some people it's $100, $200, $300 a month. Great. If we can utilize the current money that you've already allocated and budgeted for without having to add a new expense to your budget, would it be open for you to learn about a vehicle that can help you take your money you're already saving and redirect it into, the policies to help you with X, Y, and Z, right? That frame of thinking, one, take the pressure off the person. Two, it makes us realize that, okay, I don't have to go find new money to do this, right? Which I think is really, really important, especially in today's society. Can't fathom another bill.
Mhm.
But what we can fathom is, oh, well, I'm already doing this.
I can
For
reallocate.
I can reallocate this. Yeah, I can just move this to here. Yeah, I can do that. That's what I did. I was already putting money to the side. I was already used to putting away $500 a month. All we did was redirect that same thing. And now, what was cool about it is that I'm still paying the same premium that I was paying at 23 years old. It hasn't gone up.
Mhm.
If anything, it's going to go down as I get older, as I continue paying into my policy. And so that was even cool. Like to be able to be in that position 9 years later, that I'm still paying that same contractual $3,000 a year, $6,000 total. And that's what I'm still being able to pay, 9 years. The second thing that I want to say is that, outside of looking at it as another bill, right, because it's not, is really getting to a point where um, this is going to become just second nature. For a while I was doing monthly auto draft and I didn't even miss it. It was just like, it's there.
Mhm.
And over time, you become a student, and now I've gone annual. So now I like make sure that like I still live on the monthly mindset. Every month, I park that money into a separate account, and every year, my company comes and drafts it out like clockwork. But you usually become a student, and you want to make sure that every year you have your premium, you have your PUA, you have your loans paid, interest paid off. And that's what I'm learning more. But that took me time to get to where I am now. I didn't start with the knowledge I have now. And I think it's just being okay with not knowing that you're gonna have the answers for everything right away, because you're not. It's literally impossible. But if you give yourself the opportunity to take a little bit of a golden nugget here, a golden nugget here, a life lesson here, eventually all those things are gonna add up. And the aha moment is going to kind of, spark for you.
I agree 100%. You said a lot of really important things there. One of them, I've had many mentors say essentially this, like, when you go and you buy a car, do you ask that person how that car is made? How's the transmission work? Like, are you asking them all of these extremely detailed things about the car? Or are you just saying, hey, does it drive? Is it safe? Does it have the little bells and whistles that I want it to? Okay, it does. I'm buying it. I don't need to know everything. I don't need to know how the watch is made. I just want to know what time it is. Like, I most people are going to try and overanalyze a lot of stuff. This is not the thing to overanalyze. This is an implement and grow and learn. It's a learn as you earn process. Like you're going to be going through this and you're never, Nelson talks about this, the arrival syndrome. You as the client, us as an agent, doesn't really matter. You'll never reach the point where you know everything about this because there's always new information coming out about ways that people are implementing it. All of these things that you're just going to keep adding to your repertoire to make sure that you're becoming the best banker you can be. And you mentioned the idea of paying these premiums and the cost of everything and it not increasing and all that. And I want to go back to that for a second and touch on the fact that, hey, early on, we talk about this early on. This is a business. When you're becoming your own banker, you are starting a business. It is the business of you. And now it is a business that is guaranteed to be successful as long as you personally don't F it up. So the business of you says, hey, at the beginning, just like any other business out there, you're going to be a little behind. Things aren't going to be functioning at top level. So, just like anybody else that starts a business, you open your doors and you're like, you know what? We're not profitable yet. Oh my God, what are we doing? Just opened today and we have not been profitable. It's going to take a little bit of time. That's just how your policy works. At the beginning, paying for the life insurance portion, you're really starting to build a foundation, rev up the engine of your vehicle. But then you get to a point where at some point in time, and I don't know when this was for you, but you put that 3,000 in and you looked at your cash value and you were like, look at that. There's $3,300 in there. I just put 3,000 in and now there's 3,300. That means my policy just made me money for putting in money. And then it got to the point, so we call that the efficiency zone. So at some point in time, you're going to be putting money in and you're going to realize I have more money than I actually put into the policy. This thing just made me money somehow.
Mhm.
Don't know how.
Mhm. Yeah.
And then you're going to get to the point where you're like, well, look at that. Let's just call it 10 years in. Say you get to the 10-year point, and it won't take this long, and I'm sure it didn't for yours, but let's say you get to the 10-year point. And you're like, I've put $30,000 in and I have 30,000 in cash value. That probably happened for you maybe between year 5, 6, 7, something around.
Yeah.
But you're going to realize at some point every dollar that I've put in, I have. And wait, I also have this death benefit. So now I'm in a vehicle, in a policy where every time I put money in back from year 3, I was making more money and I've done a little catch up. So now I have all of my money back and I have a free death benefit. And again, every time I put my money in, it's growing me money. So the cost is really just a little delayed gratification because if you told anybody, hey, you're going to give me $100,000 and in 3 years, you're, when you pay me on a regular basis, say you're going to pay me $100,000 over this period of time. In 3 years, when you pay me, I'm going to actually give you back more money. And then by the time that we get to that final end point, you've paid me this amount and I'm just going to give it all right back to you. It's all there. But you're going to have the benefits of all of this stuff that's going to just continue on making you money. And I think people just have to change that mindset of like, well, how much does it cost? What it's costing you is building a machine that's printing you money. I don't know what else out
Yeah.
there is going to allow you to build a machine that's going to print you money, but this will. So there's the cost is you, the cost is opportunity loss. That's really what it is.
Yeah. Because it's only gonna get more expensive as you get older. Like, I probably would not have qualified for the level of death insurance at 23 and versus now at 31. I'm 32. Going how am I? 31, going to 32. So when I start another policy, I'm now 10 years older.
Hmm.
New, your back's gonna hurt a little bit more. Knees are working again in the used to.
Yep.
Now the premium's gonna go up a little bit more just because I'm at a different age point. So the fact that I have a policy that I started at 23 that I'm still continue to pay that same premium that won't ever go up is truly a blessing. And I really do believe that, the first step is just being open, just to receiving information. I really can't stress that enough. I try to tell the people around me as well. But, we live in a world of, uh, the 401ks and 403bs. I'm, uh, I had that at one point in time at 401k, like maybe the second year into my policy. And then after the job I've had after that, I've never done a 401k
Opted
or
in. You're like, I
403b.
will opt out. Thank you.
I will gladly opt out. No. Um, and because I understood, that's a whole nother conversation, but I understood the value of being able to be in control of my dollars, right? And so I treat my 401k, my 403b, my retirement fund is my policy, my bank that I have, and I park the money that would have been put into my 401k right into my policy. And I've heard stories from people that I know who have lost money in their retirement funds, who've worked hard for their money, and I just knew that that couldn't be for me.
Yeah. I mean, we're talking about just like your aunt said when you talked to her at 23, she's like, how much are you saving? Well, if you told her, "Oh, I'm saving money in my 401k," she would have said, "No, Tony, I asked you how much you're saving, not how much you're investing. We're not talking about risk, we're talking about savings. I wanna make sure that the money I'm putting away for my retirement is there for
Is
me
there?
when I retire. I don't wanna get to the end of the road and they be like, "Yeah, you know what, man? Like 3 weeks ago, you would have been super happy, but today,
Yeah.
it's nowhere to be found." So I'm not a fan of those type of things, and now, by all means, we don't tell people to not go out and invest your money. We love investing with the money from our infinite banking policies in things that we feel like we have more control over, but I just made a little short video about this the other day. Why do people do things with their money they wouldn't do with anything else? Why in the world am I gonna lock my money up for 59 and a half years not to be able to touch it, get penalized if I need to use it, all of these different things just so I can use it for this very short window of time between 59 and a half and
Right.
I think they start forcing you to take out money at 73 now. So let's call it 14 years. Like I'm trying to use my money. I want my money flowing through my system. You don't think a bank takes in your money and then
Right.
holds on to it for 59 and a half years. No, as soon as they take your money in, they're sending that money back out. Why? Because that's how they make money. Same thing goes for your infinite banking policy.
Yep.
As soon as you get money in, you can decide what you want to do with it. But if there's opportunity to send it back out and make more money with it, that's what you should be doing. Um, it's it's an incredible concept, man. What do you think trips up most people? And I'll probably end it on this next set of questions here, but being in this for so long, I'm sure you've talked to a ton of people just about it. Maybe not as like on, uh, the agent side or anything, not as somebody that's selling policies, but just as somebody that's like, hey, man, this is what I'm doing. I've been utilizing this for a while. I'm 23, I'm 25, I'm 27, I'm 30. I've been doing this for 3, 5, 7, 9 years now. Like, what are you telling people, and what do you find that the average person is getting tripped up about most commonly?
Yeah, yeah. So I will preface that I am not an agent, but I literally, when I become passionate about something, I just feel like it's my duty to share it, like we do everything else. You find a good movie, you want to share it with your friends. You find a good restaurant, you want to share it with your friends. I found something that has been great for me that I think can be great for other people too. Because I was your normal 23-year-old who was making money, who was living life, going on trips, but just had to take a step back and realize what is the life that I want to be building toward myself, and what am I willing to learn to make that happen. So I think what people get tripped up about is the fact that information is not taught in like anywhere. Like where do you go find this? Like had it not been for my aunt, would I have even known about this? Probably not.
Yeah, probably not.
Probably not. Probably not. And I would have continued going on life the same way. So I would say in a sense I got lucky,
Yeah.
and I'll admit to that. I have someone who's been doing this. But I've talked to some friends of mine. One just recently actually, and they were telling me about some of the goals that they had, and they're saving and trying to pay off debt. And I said, listen, I would be doing you a disservice if I didn't share with you what I'm doing. That has been helping me for the last 9 years. If I can Are you open for information where I can connect you with my own? I'm not the agent here. I don't have time. I'm not trying to sell you anything. Are you open to something that could literally almost transform your life in a sense? So that can actually do that, and that can help you become a better student, financially. Are you open for that? And he said, right now I'm gonna hold off. Not a problem. He's gonna continue doing what he wants to do. But we didn't even get to the point of
Seeing the information.
what the information was. So I just think we live in this instant gratification world you talked about earlier. But I also think it's just because that's not the norm. You don't hear about jobs offering you pump your money into life insurance. I believe that, and if you haven't seen the article a couple years ago, I think it was a football coach or something. Instead of taking the retirement fund, I think he
Embark off
opted,
Michigan.
yeah, he opted for life insurance and to put money in. So, like, if someone of that stature is doing that, come on, like,
But they're not putting that on the news. They're not like, "Oh, you know
oh,
what?
great, of course,
Putting $10 million into his life insurance policy, his whole life insurance policy, Dave, Ramsey, Susie. Jim decided to do it, but it's probably not a good idea."
yeah. So, people do get tripped up over the thing that they don't know, and that will cause you to just spiral downhill.
There's a great quote in the book on page 4, one of my favorite quotes that I've ever heard, and it's by Will Rogers. I mentioned it on one of the previous podcasts when I was doing the book review, but I think this rings so true to what you just said. It says, "The problem in America isn't so much what people don't know. The problem is what they think they know that just ain't so." Like, everybody, and again, you could take it for what it's worth. We think we know something. Luckily, we have facts to back up what we're talking about. We have guarantees. We have all of this stuff that can prove to you a system that works. So we're not standing on a shaky foundation. We have a 200 plus year history of something working. Guarantees. You can't say the same thing. 401ks weren't even built to do what they're doing right now, what they're forcing on people. All of this stuff, the market, they say you average 12. All right. Well, show me who's retiring from having their money in qualified plans and just getting to that point in retirement where they're like, you know what? I crushed it. I absolutely killed it. I have all the money I ever wanted. Thank you so much, qualified plans. You did me right. Like that's not happening. I think one of the big problems is people, one, I think they just want to be less and less educated now. And people aren't really willing to like put the time in and learn. Like we talked about the immediate results thing. They're just like, I want the answers right now. Like fix my situation right now. I don't want to learn anything. I don't want to read anything. I don't want to spend any time going through anything. I just want it fixed. You're like, well, that's not how anything works. That's definitely not how building wealth works. Building wealth
Right.
takes time. Yes, you talk about um, Warren Buffett. Warren Buffett had a good amount of money, $1 billion or so up until he was in his, I think, late 60s. And now he's worth like, I mean, multiple
Yeah.
billions of dollars. And he acquired the majority of that wealth in these last couple years of his life because building wealth takes time. So a lot of people, they want to buy things, but they don't want to be sold. And I think that's why we always try to lead with education. Like, hey, listen, I'm not going to sell you anything. If
Yeah.
you don't get this, I can't even get you a policy. You need to understand what we're talking about here.
Right.
So read the book. I talk about this on every podcast. No advisor, no job that you have before you sign up for your 401k sits you down and says, you know what, Sonny? I want you to read a book about 401ks so you understand how this whole retirement thing works before you decide to get in on it because they don't want you to know anything about it. They're like, we know this sucks. So if we just tell people that it's what everybody else is doing and automatically opt them in and just take it from their paycheck out of sight, out of mind, then it won't be a problem. They'll just do it. But we're over here saying, you know what? How about you control the system? Problem is that takes work and people just don't want to work these days.
Yeah, yeah. What's funny, to my last point here, maybe about 2 years ago, my husband and I were well, now my now husband, we were going through the house buying process just to kind of see, like, what we were qualified for and all these things. And when it came to the down payment with the realtor we were, like, working through with the numbers, he said, "Okay, great. So is there, like, a family member who can give you, like, 30, $40,000?" And I was like, "Yeah, no." But I said, "We have, life insurance policy that has cash value." And he said, "Oh, okay. Well, I don't think you can use that, for this. I don't think that's like you need like a gift letter or something like that that can, make up for that." And I said, "Well, no. This is an asset that we have. We were able to write it on our asset line,
Mhm.
uh, the cumulative, worth of our policies, of cash value that we have." And it was just so fascinating just to sit back and he was trying to deny the very thing that literally we have the money to be able to do the down payment. We didn't buy a house yet, we waited, but it was just really fascinating to see like a lot of people just don't know what they don't know.
Yeah. Yeah, and, again, it's unfortunate, but I think that's why we're out here trying to educate people, and I think a lot of people get confused. Again, we are not I like to clarify this because people will comment on my videos and be like, "Sounds like an IUL pitch." Like, listen, bro. Obviously, you haven't watched any of my videos. You haven't even gotten through this entire video.
This is not
I
that.
basically say participating whole life insurance policy in every video I talk about it with. But you guys got to understand, we're not talking about IUL stuff. This is a properly structured participating whole life policy with guarantees in the contract, the same type of thing they've been using for 200 plus years. The only thing that's changed over the last however many years is they've added the ability to put on the PUA, which allows you to get more cash in the policy sooner so you can have liquidity to use it. If you didn't have the PUA, Nelson had policies that were all base. Those just take a little bit more time to build up cash value. So it's going to be a few years before you have access to cash. The PUA just brought in the ability to get access to that cash sooner. Outside of that, and them introducing the mech thing, which wasn't just a whole life issue, but it was brought about because of whole life and people were just shoving all sorts of money in there because it was an incredible thing. And they're like, you can put as much in there and have $100,000 insurance. Outside of that, nothing has changed with this thing. Do your research. Don't trust me. Don't trust Tony, even though he's not an agent. Don't trust anybody else out there saying good or bad things about it. If you want to be wealthy, if you want to take back control of your life, if you want success and education about money, you're going to have to put in a little bit of work,
Yep.
do some of the reading. And I promise you, the more you look into participating whole life insurance, the more you will love it because it's all right there. Nobody's trying to hide anything behind the curtain. We're not trying to pull a fast one over on you. Nobody is out here trying to be sneaky. We want you to know absolutely everything because we know when you do have all the information in front of you, the answer is literally obvious.
Great.
So, man, anything else that you want to end this with before we wrap this episode up? It's been
You know,
fun chatting with you.
I would just say, just echo your sentiments. The greatest weapon that you have is knowledge, and if you don't use it, that's where our people are destroyed for lack of knowledge. So learn, watch this video, check out Shawn's other videos, read the book if you can, um, and get in front of the people who are doing the things and have the lifestyle that you want, and ask them what they're doing. Um,
Exactly.
and more importantly, the time is now to learn this, get your life insurance policy, your whole life insurance policy out and learn how to build the wealth that you desperately need.
Yeah, we tell everybody all the time. I apologize. Literally, I apologize that this just happens to be whole life insurance. If you can't get over that, this is not going to be for you. But if you can put whatever your Uncle Bob, your mom, your broke cousin, the guy at your job that's trying to get you up for the 401k, if you
Mhm.
can put all of that stuff, all of that information out of your head and do the research yourself, I promise you, you'll find a tool that can completely change your life. You'll figure out what the wealthiest families in America have been doing for centuries. And if it's good enough for them, I can tell you it's good enough for me. It's good enough for Tony as well. So, really quickly, Tony, before we close this out, let the people know where they can find you, where they can find your book, coaching, all
Yes.
that stuff.
You can head over to my website, www.tshavers.com, tshavers.com. My books, my coaching programs, all that's on there. You can also find my books on Amazon as well.
Awesome. Speaking about books that you can find on Amazon, I'm not sponsored. You do not get any money from this, but go and get yourself the fifth edition, Becoming Your Own Banker by R. Nelson Nash. Give it a read. It's a 90-page book. All of you can get through it. I promise you. And listen to the podcast. Myself and one of my co hosts, Liz, we break down the book in simple terms so people like myself, who were probably a little bit slow when I first read it, better understanding of it. But outside of that, again, I appreciate your time, man. That's a wrap for today's episode, you guys. We appreciate you coming, tuning in, learning, and growing with us. Hopefully, this discussion helped shed some light on the concept of infinite banking for you guys. Hopefully, it brought a little bit more clarity onto how it might be able to impact your life. I know Tony provided us with a lot of great information, specifically just from a client standpoint and how it's been able to literally change his life. Again, if you'd like to check out a full overview of the information and really get a good understanding of what infinite banking is, I'll go ahead and link that at the end of this video. If you're just listening to the podcast, you can find that down in the show notes. Uh, oh, and if you'd like to chat after you watch the video or read the book, if you'd like to have a free cash consultation, just literally talk about how this could benefit you in your life. If you have any questions, feel free. Link is in the description below. Book your free cash consultation, and we can have a conversation, a grown-ups conversation about money. As always, you guys, the information is free, but the knowledge is priceless. Peace, man.